All right, so we're going to go to David Griscom, and he is going to do his gem segment because we couldn't get to it last week because of what a tech nightmare that was last week. But again, handled with aplomb by all.
Yeah, and this one wasn't too bad either, honestly.
It wasn't too bad.
Yeah, it's just scary when you get that weird ball.
When you get that weird ball.
Say what?
The floating beach ball of death.
Oh, I call it the spinning wheel of death, but it does look like a beach ball.
There's nothing to worry about with our spinning ball. Nothing to worry about.
Nothing to worry about. It's going to be totally fine.
Yeah.
It reminds me of the beginning of a bad trip, actually. Like, like the way that colors start to intensify. You're like, oh, fuck.
My computer is just so fucked that I just see it every time I open it. My laptop, so it's like I'm desensitized.
Yes,
it doesn't trigger me
I'm
anymore.
I'm totally there with my laptop too. I'm just like, hey, you know what? You take a minute.
Yeah, whatever. Yeah,
it's fine.
I'll push the
just
button,
relax.
Force the restart.
You know what? I'm gonna go get a glass of water, and hopefully you'll sort yourself out. David, what's going on in the world of economics?
Yeah, I mean, a few things are going on, but one thing that everyone's been focusing on is the upcoming G20 summit.
Yes.
But earlier this month, there was already the G20 summit for finance ministers and central bankers. And it ended with a joint statement, which included a pledge to use all the policies they can to protect global growth from disruptions due to trade and other tensions. And the kind of language, like games that they play to put into these statements is really tricky and political. So the fact that they came out so explicitly against the trade battle that's going on between Trump and China right now is very significant. You know, and obviously that was pretty much what everybody was talking about during the summit was the tension between China and the United States. But this is coming at a moment where there was really a global downturn in the U.S. and the U.S. economy and also the global economy. You know, obviously China and America's trade tensions is playing a lot into this, but the U.S. economy is showing signs of weakening. The Eurozone has been showing little signs of improving.
Well done,
and
David.
Even the powerhouse.
I like that. Multitask analysis.
Even the powerhouse of Germany has also been weakening over the past couple of weeks. And most importantly, when you really start to see how weak the structure is getting, the BRIC countries are facing massive downturns. Just 2 weeks ago, global drops in the price of oil, which the international economy and especially the United States are overdependent on, only worsen the situation. And just to give you guys a little bit of context, for example, in May, the United States only added 75,000 jobs, which is a huge drop from the previous past few months of growth. We've seen low oil prices, treasury bonds showing lower yields. Other bad indicators, including retail and factory orders, went down in April, which is showing trouble amongst business sentiment. So, oh yeah, and then one more thing that's really important actually is that home starts have gone down just recently. So that means people are less likely to be building homes or pursuing. So this is showing a downturn in the U.S. housing market. So the big question is, what is the Federal Reserve going to do? Are they going to lower rates again? And most people are looking at that as that's a very likely thing to happen. A lot, especially people on Wall Street, really want to see that. But, you know, we really need to start talking about the difference between the financial fantasy world and the real economy. We've been living through an economy that's been buoyed by the asset prices. And let me just put this graph up real quick. This is actually really fascinating. Do you mind if we zoom in a little bit here, Matt, so that people can see it?
Enhance. Computer. Enhance. All right, go ahead, David.
So it's not, it might be a little difficult for people to read, but this blue line here, that's corporate profits, and that red line is wages paid to workers. So you see, it's really interesting though. You see that actually, you know, for the most part, you know, the stock market does, you know, react to bad news. So you see that it's a little bit more volatile, but for the most part, throughout American history, it actually has, you know, trended with, you know, wages for workers. But starting in 2000, when you really start to see the Federal Reserve change their policy to really focusing on the stock market specifically, and then especially after the financial crisis, you see that there's really been a complete divorce between corporate profits and wages paid to working people. So it's something that we really need to start, you know, thinking a lot more about, is that, you know, this use of monetary policy to fix an economy that has just fundamental inequities, that we really need to start talking about fiscal policy. We're talking about stimulus, to working people, to, something like a Green New Deal, to really get the U.S. economy rolling. Because what we've been doing is playing this game trying to create cheap money so that people can buoy asset prices. Has not been working. It's exceptionally prone to crisis.
And that's been the story since the late 70s, basically. I mean, if you look at like when that kind of, at the very least, the like basic social democratic arrangement in Western Europe and particularly the United States is you eliminate all of those protections. There hasn't been a real wage increase since the 70s. So you flip it onto like basically cheap credit for people to hide the fact that they can't afford the necessities of their life. Like we know the statistic that like over half of the people in this country cannot even get together a couple $100s in the case of an emergency. So people put things on credit cards and so on. So even though like the deficit as a national problem is bullshit and a right-wing talking point, there's a lot of personal debt of people that's a huge problem.
Absolutely.
Student debt, medical debt, and otherwise that needs to be taken care of basically like just in giant cancellations. And it shouldn't be means tested. That's another annoyance about, some of the things that even like liberal, people are putting together. Stephanie Kelton pointed out, who's Bernie's, one of his economic advisors, she's like, look, just make student debt relief universal. And if you're worried about it, trust me, Jeff Bezos and the Koch brothers, their family don't have student debt.
Yeah.
So make it a
No,
non-complicated, no bullshit program and get rid of it. Because by the way, even for people who are relatively off, more privileged, like someone going into law or medicine or something, they're still losing a massive amount of their income to these things. And that hurts the overall economy and their own trajectory, even in a more privileged position.
And talking about that, it's like what we were talking about earlier with Bernie Sanders' speech. You've seen the explosion in debt for individuals, in student loan debt, in credit card debt over the past 20 years.
Yes.
Is it any surprise that that's gone on at a period of time when there's been a huge increase in financialization and financial profits? Of course not.
Right.
So what Stephanie Kelton there is talking about is really important too, because that's a way, we can make the argument we need people to, not be under student debt relief. This is also a way that we can sort of pull back a lot of that debt that's been created and is holding a lot of working people down out of private hands.
I think debt relief as a frame from student debt cancellation to canceling debt in the Caribbean and elsewhere is actually a big frame for left-wing politics, in my opinion.
Need to float the Jubilee concept.
There needs to
again.
be a global Jubilee because there's so many arrangements that are locked in on illegitimate debt. I mean, just even go like Haiti paid off France to not reinvade it for liberating itself from being a slave state.
Yeah.
That's a demented, and it plays the same role in why banks are able to exploit Haiti today, down to on a different. Obviously, it's a totally different thing, but student debt in this country, it's a ludicrous. Get rid of it, reset it, and reclaim wealth, or come up with some silly bucks scam in a novelty bullshit candidacy. But we're not talking about that now.
Cancel it. Just
Trigger
cancel
alert. Just cancel
We
it.
need cancel culture to.
Yeah. Get counselor. Yeah. Stop worrying about bothering everybody who's funny or whatever, and go do cancel debt, not people. That's the new
I
slogan.
like that.
It's not bad.
Well done. Not.
I think we found a T-shirt.
Yeah.
That's a good one. This system is canceling a lot. Don't worry about it. Let's reset. You've just watched a Michael Brooks show video, and you can watch all of our full main live shows every Tuesday night at around 7 p.m. Eastern Time, and subscribe to get all of the clips you want. We're covering the globe. We're focusing on international relations, the intellectual dark web. We're having fun. We're doing deep dives with a lot of amazing guests. Of course, become a patron for the whole thing at patreon.com/TMBS, or subscribe to this YouTube channel and help us keep growing and get that content out there. Subscribe below.